We just have the biggest and the best speakers here at FinTech Week. We have someone who's at the helm of a FinTech giant in China. He exploded out of his native Montreal with a degree in computer science from the Université de Montréal. He went on to build enterprise software for Oracle. He then became a co-founder in Lending Club, the world's biggest online marketplace connecting investors and borrowers. He was the head of technology there. He built the platform. He left in 2011. He did not rest on his laurels. Now, some things work in some places, and they don't work in others. Whether it's culture, it's language, it's religion, it's law, it's politics, whatever. But our next speaker is somebody who can make anything work anywhere. He built the biggest in the world, and then he took his experience, and he came to China, and he made it better. Ladies and gentlemen, please welcome the founder and CEO of Dianrong from Montreal, from the United States, and now from China, Htite. All right, man. Good evening.
Pleasure to be here. Thank you so much for joining us. I would like to talk to you today about a couple of things that are happening around us, and it creates some confusion. So for the short time I have, I'm just going to try to help everybody here to connect the dots. Before I start, I would like to share my background with you. I was fortunate to live my last 23 years working on very exciting projects. I started my career with Oracle, where I was building software for large banks and large financial institutions, insurance companies. So during that experience, I learned a little bit how financial services do think about the problems they're solving. Then I co-founded Lending Club with my good friend Renaud Laplanche, where I learned that looking at finance from a technology point of view is very, very different than looking at finance from a banking point of view. To illustrate that, every time we talk about finance, especially in the context of bankers and banks, we think about these type of customers. We think about the VIP customers, and we think about where capital is, and we think about the service, and we think about new technologies coming to disrupt our industry. But when we are technology people, and when we think about finance, we think about how to create a solution to simplify life for everyone. Difference between focusing on a certain group of people, happens to be people with capital, versus making finance available to everyone. So maybe technology people are naive or arrogant, thinking that they can solve everybody's problem. But really, this is what we like to look at. We like to solve infrastructure problems. We like to solve balance or imbalance problems, instead of taking opportunity of a certain group of people by using arbitrage against another group of people. It's fundamental to the way an engineer thinks versus a business person. So things happened during the last 25 years, and it happened at a very fast pace. What you see today did not happen yesterday, but it's something that's been happening over a long period of time. When I say long period of time, 25 years, I mean, in reality, 25 years is not long. So you can imagine the fast pace by which our society is changing. If you think 25 years ago, you were getting your information from the TV set, from the newspaper. Most of your information today comes from your peers. And that is all because of the network effect that has been created. So I remember 25 years ago, when I was going to school, if I need to do my research project, I will have to go to the library. People that came after me 5, 10 years ago were 10 times more efficient than me because they can go into Google or Yahoo and get all the information they want. So we went from phase to phase, and every time we turn the corner, technology asks society for a little bit more trust. Give me a little bit more. And when you give me that, I give you a bigger value than what I was giving you before. So with Google, I got your attention. Before that, I just have a directory. I said, oh, you like wines? Click here, and you get all the information about wines. But are you looking for the price of wines, or are you looking how to make wines? So you are actually giving me a little bit more information about yourself. Google gets a lot of information about what you like and what you don't like. So we are giving that. And then we move to transactions or e-commerce. So imagine the person the first person in the world that sent $5,000 to a place called Amazon.com to get a TV set because he thinks it's a much better value than buying it from Best Buy. Imagine the trust that this person has to have in a company completely in a different state. So then we moved to social networks. And the amount of trust that we have to give to technology to get the value from social network is probably the highest capital you have. It's your personal information. I mean, you can give money, and it could turn out to be wrong, and you can always reverse it. But if you give your personal information and it goes out, there is no way you can recover from that. So every time we give a little bit to technology, technology gives us something back. And of course, the latest that we have today is shared economy. So it's almost like a baby that is growing. First, you give him information. Then you let him try to do transactions in a controlled manner. Then you send him to college where he meets other peers. And then they come out and they ask, OK, well, now I don't need the institution. I can do this by myself. So such transformation has to be empowered by a major effect that is happening in our society. And that is data and data availability. According to IBM, 90% of all the data we have today has been created in the last two years. That's everything that we have today. In other words, or another measure, every day we create 2.5 exabytes of data. That is the equivalent of 90 years of HD TV. So like almost your grandparents' life in high definition is created every day. So we ask people, where does this data come from? Everybody says Facebook, Google, Alibaba, Tencent. No, data comes from every place. Data comes from government institutions, from the hospital, from the church. Data is coming from the people that organize this conference today. They know which presentations you're going to go to. They know which ones you're going to avoid. And it's fundamental to them because that way they know next year which event to organize and which events not to organize. So every business around the world is using data and is reading data. And you have no way to escape. So if you don't want to be part of it, then you should go live in a cave. Society today is all about data. So when you have a lot of data, the question becomes trust. So there is a very interesting TED Talk by Rachel Botsman where she describes our society today, or the economy, no matter what it is, the biggest currency, the most scarce capital we have is trust. In an ocean of data, how do I know that data is correct and that data is not correct? So, old economy, we say, trust me. Or I spend a lot of money in the brand name. Basically, I force you to trust me. You have no choice. And you understand that if I do something wrong, my brand name is going to be wrong. But you know, that caused a lot of problems for us. But today, if I go to India, where I've never been, and I want to take a taxi to take me from the airport to my hotel, and Uber gives me all the data related to the driver that is picking me up, also gives me his history, I feel much more safer taking that ride, even if it is at 3 a.m. in the morning, than some yellow car in front of the airport telling me that they're going to take me to my airport. So we are becoming an intelligent society that doesn't look at making decisions based on branding and images, but based on logical decision-making that is based on data. So Rachel continues on describing the evolution of trust. And it's a very interesting model to look at. When we were small, we were living in villages, the number of people around us was very small. So it was easy for one another to trust each other because we live with each other. And then we start doing businesses and projects at a larger scale. And that's when we needed a moderator to come in. Actually, the definition of a bank, which started in one of the Italian markets, is a table in a marketplace that people go to where he records all the transactions happening. So we needed an institution to moderate and to keep trust and to keep a record of what we do between each other. And this is what got us to the civilization that we have today. Now we need to jump and move to the next level. And the reason why we need to move to the next level is because, as I showed you before, we have 7 billion people on planet Earth. If you are here, you're probably 1% or 2% luckiest people in the world. All those people need loans, need services, need opportunity. And there is absolutely nothing that they can come up with and show to us so we can do business with them. We just don't trust them. But we trust you because you have a degree from such and such university. We trust you because you have a resume from your previous jobs. We trust you because you have a brand name. So we are moving to a new level, which will allow us actually to make all services available to everyone. Let me go back to the Uber example. This driver, his name is Sandeep, is actually somewhere between the institution model and the distributed model. It's great that he has all that data with him. But unfortunately, if he decides to stop working for Uber and go work for another company like Grab Taxi or Gojek, he cannot take that data with him. So he has to start from scratch again. So he lost all the trust that we had in him because he doesn't carry with him his reputation. And this is where it breaks. So everything we do is to help people to build reputation in a way that it will be trusted everywhere they go. And these are the biggest challenges that technologies have been focusing on. And there is no place where that aspect is so important as finance. And the reason is because money is toxic. How do I explain this? The day I picked up the phone and I called my father, I told him, look, I'm leaving Oracle and I'm going to start lending club with my friends. He was really sad. He told me, how could you drop working on technology and do finance? He told me, listen, if you build technology and you fail, people are going to say you're unlucky. If you try to create medication and you fail, people are going to say you're unlucky. If you try to do finance and you fail, people are going to say you cheated. That's how society looks at finance. That's how society looks at money. In the case of healthcare, if you create drugs and somebody used them and died, which is 1,000 times worse than people losing their money, they will still say you're unlucky. It's the way we function. It's the way we have cultures operate. So how do we create trust in an industry that is always synonymous with scandals, synonymous with greed, synonymous with all the bad things that you can think of? This is the biggest challenge finance has. And the answer, you build trust with reputation. There is no magic around it. So we have to come up with an infrastructure that allows us to build reputation and carry it around from place to place. So let me illustrate with an example how the new technologies that we have today have been addressing this problem. We created our company in China to focus on this problem. In China, there is about 40 million SMEs, but only 10% of them can get capital. There is, at the same time, $7 trillion of investable wealth. This is not in the hands of banks. This is in the hands of people. And they are looking badly for investment opportunities. So you have 40 million SMEs all looking for capital, and you have plenty of cash that is looking for investment opportunities. And the maximum we could have done is 10%. So this is a very serious structural imbalance. You can't continue to grow the economy if you don't look at the other 90%. So we created Dianrong in 2012. And the purpose of Dianrong is to use risk management and new technologies to give reputation to those SMEs so they can get funded. So what we did, traditionally, banks and financial institutions will focus on the gray area, which is show me your bank account, your credit history, your credit score, and your debt-to-income ratio. The first version, which is probably 6 years old, in our risk management, added utility payments and online footprints. By online footprints, I mean the digital transactions that we can get about you. We cannot have them self-reported. We have to get them from other places. But really, that project on risk management keeps evolving again and again and again. And today, we can really have a complete picture that gives all the necessary reputation to the SME that is looking to get funded. And more important, when we share this information with the SME itself, they become very, very careful about maintaining their value in society, about maintaining their reputation. So automatically, it creates a positive feedback loop. So the more you pay on time, the more your reputation goes up. The more you do good, the more you get better value. And that is how economies do work. So we made an announcement about 6 months ago how we used blockchain technology in particular for supply chain finance. For 50 years, supply chain finance has been one of the best assets for banks to lend to. So imagine there is a core company, a large multinational, that has some relationship with suppliers in level 1. Supply chain finance in manufacturing, in agriculture, in shipping does not stop at level 1, but it goes very deep. It goes to 5, 6, 7 different levels. So you have banks focusing on level 1 and giving them all the trust and the reputation they deserve because they can prove that they have a relationship with the core company. But it leaves everybody below completely with absolutely no reputation. In fact, the solution that the bank came up with, which is the account payable, is the main reason why the people below, or the SMEs below, don't get absolutely any reputation whatsoever. They cut the flow of information by taking that whole transaction outside of the system. So we used blockchain technology, and we tracked the project requests and purchase orders and the delivery of each project between every different levels. So if you are a big electronics company or if you are a big manufacturer, you are really now able to view every single transaction that happens in your supply chain finance. And more important, the credit worthiness of somebody in level 3 or level 4 becomes exactly the same as the credit worthiness of someone that is level 1. We were able to take a market that was only 15% addressable by banks and add the other 85% to it, just by using what we call the technology of trust. Finance is nothing more but information management. We don't create boxes. We don't ship boxes. All we do is we manage information. And the number one responsibility of managing information is when it happens and we store it, it should never change, should never be altered. That's why a lot of time you hear of concepts like system of record. Whenever we get lost, we go back to the system of record. With blockchain technology, you can do multiple things. The idea of being able to have an SME or a person show up anywhere with a digital proof of his reputation is probably the most powerful concept we've ever created in software engineering. I worked for Uber for 10 years. When I switched to Lyft, I take that information with me. It's my information. And when we have systems like this that blockchain technology promises, we can create Bitcoins, we can create ICOs, we can create dynamite if we want. We love blockchain technology. We do not like ICOs. We don't care about Bitcoins. We care about what creates value. when you empower people and SMEs with a tool that the concept of, oh, let me go check the credit bureau, and then I get information about you. How do you know it hasn't been hacked? How do you know it's not a mistake in there? But when information is in your hand, whether it's financial, whether it's medical, so you can move from doctor to doctor, it really empowers people, and it allows us to participate together in big projects in a distributed manner. That is why we believe blockchain technology is not only going to change the way we do finance, but it's probably going to change pretty much everything we do in life. So we love, as engineers, to solve infrastructure problems. And it is true that in Asia, the projects that we work on compared to what we do in the US or in Europe are all about infrastructure. And that is because of two reasons. Number one, there was no infrastructure before these things start to happen. It's an emerging market. And number two, we don't feel the need of changing our infrastructure in the US, for example, because banks have a certain level of service that customers are, to some extent, happy with. So we do believe that the innovation in finance will come from Asia, will come from countries like China, perhaps Hong Kong, perhaps Singapore, perhaps Indonesia. But the amount of new things that are developed in Asia is much, much more than what happens in countries like in the US. So before I leave you, there is this question that we get all the time. What is the future of finance? Again, I think finance is going to become a logistics problem. It's not going to be an arbitrage opportunity. I know we have regulators with us today. The good news is it's going to be super easy to regulate. You empower people, you empower SMEs, they are responsible for their data. You will be able to participate in monitoring without, which is extremely important, without affecting the business of companies. Banks and financial institutions today are very unhappy with how much they have to spend on compliance and regulations. It's becoming unsustainable. But with these technologies, as a company, we can focus on doing our business, but because we adopted an infrastructure like blockchain, we can invite regulators to see what we do any given time. It's a system of record, it's a system of trust that we use it between us, but also can be exposed to everyone else. It's going to become simple. Whether you like or you don't like derivatives, whether or not you like complex things, you can choose the level of complexity you want to have in finance. And we think it's going to become a huge industry because financial inclusion is not going to become an additional thought we do after we set up the bank and we get the shareholders and we build the infrastructure. It's going to become part of the original problems we try to solve. Thank you.
Way to go, man. All right.